The next misunderstanding will surprise you. Equity is not valuable. How crazy is that? Companies exist in order to grow their equity, right? Profit is a part of equity, and profit clearly is a great thing. So surely it's valuable. We want more equity, we want more profit, so surely it must be valuable. No, it's not. You want to go back to the definitions and ask yourself, what is equity? Equity is the obligation of this company, we've imaginarily called it ABC Incorporated. It's the obligation to return the valuable assets to the shareholders one day. It doesn't have to return them immediately, but if it liquidated the company, it must return the assets firstly to the creditors and then the rest of the assets to the owners. So, what is valuable? Well, we've said assets are valuable. Equity is the obligation, the good obligation to return those assets and to hold them and use them to the benefit of the shareholders. So equity is not valuable. If you think that equity is valuable, it's because you're standing in the wrong place. You see, if I stood over here and stood outside of this framework, so to speak, looking in, if I was the owner of the company, then if I own a share of the company, clearly that share is valuable to me, but we're not talking about the company anymore. We're talking about the owner's framework. And in the owner's framework, imagine for a second that this is the owner, the shareholder. Well, in their framework, they have an equity type investment in our ABC company. But it's not equity. It's an equity type asset. It's an asset. And that asset in their hands is valuable. But if we stand from the point of view of our company, ABC, so to speak, looking out, equity is the obligation to that owner. It's not a valuable thing to us being the correct point of view. It's the obligation. The assets are what is valuable. Assets are the only thing that is valuable.